And now to our market monitor, who finds opportunity in some blue chip stocks he says should be in your portfolio for the long term. Couple of financials he's going to talk about. Last time he was with us was December 2014. He recommended ExxonMobil. It is down 10%, Chevron down 13%, and Schlumberger basically where it was. Hank Smith, welcome back, Chief Investment Officer at Haverford Investments. Let's talk first, for the record, I don't mean to bring up painful memories, but two of those three didn't do so well. It has just not been a good time for energy.
No, it hasn't, but I like how you emphasized for long-term investors, and at least you're getting paid a very healthy dividend and a growing dividend, both with Exxon over 3% and Chevron now over 4.5%.
So you're still happy owning those companies?
That is correct. We still own them in our portfolios, and we're buying them for new clients as well.
Happy might not be the exact word that you would use, but you're certainly satisfied owning them.
We are. Again, we have a long-term perspective, and over many decades, regardless of where the price of oil has been, names like Exxon and Chevron have delivered excellent total shareholder returns.
But right now you think investors should be looking at financials as well, and what are some of the names that you like?
Well, we like the two highest quality banks in the United States, if not the world, Wells Fargo and JP Morgan. They're poised to do well in a rising interest rate environment that will help their net interest margins. Also, particularly with JP Morgan, it looks like the headwind of legal and massive fees is starting to dissipate and will be much less so on a go-forward basis. The companies are returning money to shareholders in the form of dividend increases, so you have a 2.5% dividend yield with both of those companies, and you can expect annual increases each year, and they're valued quite reasonably at these levels.
Yeah, you certainly have chosen sort of best of breed in that area. UTX, right. United Technologies, a company that's been in the news this week. They're selling off their Sikorsky helicopters. They had a little bit of an earnings stumble, if I'm recalling correctly, but you see this decline in the stock as a buying opportunity.
Yeah, it's almost a bear market type decline of about 20%. They're in great businesses, Otis Elevators, Pratt & Whitney jet engines, the Carrier building facilities that have wonderful reoccurring revenues. There's some temporary headwinds, the stronger dollar, concern over China slowing, but we think this is a good buying opportunity. And to take a Warren Buffett-like viewpoint, with the proceeds from Sikorsky, they're going to be able to buy much more shares than previously at these lower prices, so we think that will be good.
All right, Hank, thanks very much. I appreciate your long-term perspective. Hank Smith with Haverford Investments.